Russians are being punished for a war they never asked for. Vladimir Putin has made a catastrophic mistake. He thought he could finance his war in Ukraine with oil and gas alone. But 3 years and hundreds of billions of dollars later, the golden tap is empty. Russia is running out of cash, as the war is draining the country's finances faster than Moscow can refill them. So now, the Kremlin is unleashing a brutal new weapon, not on Kyiv, but on its own citizens. The result? A financial shockwave that has turned Russian wallets into the new front line. What we're about to discuss might go down as one of the most catastrophic cases of self-destruction in this war. Let's start from the beginning. This entire crisis stems from a simple, brutal reality. Russia is running out of money. Right now, as it stands, billions of dollars are lost every month to tanks, rockets, and soldiers' paychecks. What Putin intended to be a one-sided, speedy invasion has now become one of the most expensive military campaigns in modern history. And it's starting to show where it hurts the most: the economy. For years, Russia lived comfortably off of its oil and gas empire. Those exports paid for everything from roads, schools, hospitals, pensions, and even the endless political promises. As long as energy prices stayed high, the system worked. But then Putin failed to play nice, and now that golden tap is running dry. Since sanctions moved into the Kremlin like an uninvited guest, Russia's oil revenue has fallen by nearly a third, drastically reducing the nation's funding. Europe, once Moscow's biggest buyer, stopped buying almost overnight. Now Russia is stuck selling its crude to China and India at heavy discounts, sometimes $30 to $40 below global prices, just to keep the cash flowing. What all this means is Russia simply doesn't have as much money to go around like it did just a few years back. What's worse, these new lifelines are starting to look like a leash. As Moscow leans harder on Beijing to buy its oil and gas, it surrenders control, as China now sets the discounts, the delivery routes, and even the currency of payment. What was once a proud energy empire is quietly becoming a supplier on Beijing's terms. And yet, faced with a limited market, Russia keeps selling to China, India, and anyone else who will take their oil at whatever price they're willing to pay. It's kind of sad, really. All of this is like watching your rich aunt slowly pawn off all of her jewelry. The oil still sells, but the profits have shrunk. It's a slow bleed. And while the pipelines pump less money, the war keeps demanding more. Russia's defense budget is now the largest it's been since the collapse of the Soviet Union, and it doesn't look ready to stop growing. Just last year, it reached almost 13 trillion rubles, or approximately $146 billion. That was roughly a third of all government spending. To put that into perspective, Moscow is spending more on the military than it does on health, education, and social services combined. That is a crazy fact. Essentially, every missile that flies over Ukraine leaves a hole in the country's finances back home. As you might have come to expect from Russia, the Kremlin tries to cover these holes with confidence. Officials boast that the economy is stable and that Russia has adapted. But the numbers tell a different story. The ruble has lost nearly half of its value since the invasion began. Inflation hovers above 8%, while real wages fall behind. Even basic goods like bread, sugar, and eggs now cost 20 to 30% more than they did before the war. And the further you go from Moscow, the worse it gets. For the average Russian, this translates into a daily grind, where every paycheck buys less. As the months go by, food takes up a bigger slice of income, and utilities cost more. As for expenses like car repairs or medicine, those are luxuries now. The pain isn't dramatic or sudden, it's quiet, steady, and everywhere. People feel it when they fill up their gas tanks, when they shop for groceries, or when they see their savings evaporate. All of this has made living in Russia a painful experience right now. But not all of Russia feels that pain equally. In Moscow and St. Petersburg, life still looks normal. Cafes are full, luxury stores stay open, and salaries are padded with state subsidies meant to keep the capital calm. But step outside the big cities and the illusion collapses. In places like Buryatia, Dagestan, or Kemerovo, paychecks barely cover food and fuel. This growing divide, often called the two Russias, is one of the most dangerous outcomes of this crisis. The Kremlin keeps the cities polished to project strength, while the regions carry the hidden weight of war, taxes, and conscription. But despite this glaring red flag and suffering from the people, Moscow keeps spending like a country at peace with its finances. Billions go towards military contracts, battlefield compensation, and rebuilding territories under Russian control. The war is eating money faster than the country can earn it. By the time the year ended in 2024, Russia's budget deficit had already passed 1.9 trillion rubles. Currently, the shortfall is even worse. As of this year, it's around 5.7 trillion rubles, roughly $70 billion. That's about 2.6% of GDP. To mask the scale of the financial shortfall, Moscow has turned to creative accounting. Entire chunks of military spending are now hidden inside vague budget lines labeled national projects or infrastructure initiatives. Funds for missiles get recorded as construction support. This means that on paper, the deficit looks smaller. But in reality, it's a shell game. Even officials inside the finance ministry know the math no longer adds up. But the goal isn't accuracy, it's survival. So with oil unable to pay the bills anymore, the Kremlin's next move was inevitable. It turned to the people. Instead of cutting spending, Moscow's new strategy is brutally simple. If the economy isn't bringing in enough, just take more from those who can't fight back. And that's exactly where the domestic tax hikes began. At first, the changes sounded harmless enough. Officials called them budget adjustments, a soft phrase that really meant we're taking more of your money. Corporate tax went up from 20 to 25%, the first major increase in over a decade. The government dressed it up as an act of patriotism, urging big companies to support the special military operation. But in Russia, big companies usually means Gazprom, Rosneft, and other state giants, firms that always seem to land on their feet. Within weeks, many of them received quiet exemptions, extensions, or creative loopholes to soften the blow. The real burden fell on the small guys. Family cafes, repair shops, delivery firms, they couldn't lobby or hide their profits, they just paid, and they bled for it. By mid-2024, regional governors joined the scramble for cash, slapping on property tax hikes, vehicle fees, and even new service charges hidden in utility bills. Electricity and gas prices jumped again, supposedly to raise 160 billion rubles by 2032 through so-called fairness reforms. That plan tightened social norms for cheap electricity, slashing household limits from sky-high thresholds to bare-bone averages, like 220 kilowatt-hours a month, while phasing out discounts for the vulnerable. For most families, it felt less like patriotism and more like daylight robbery. The big, non-state companies, meanwhile, found a different way to bleed. It happened quietly through the back door. When the Kremlin announced its so-called windfall tax on large corporations, the oligarchs didn't complain. They simply moved their profits elsewhere. Dozens of Russian firms quietly re-registered in friendlier jurisdictions like Dubai, Armenia, and Kazakhstan. It was all perfectly legal, but also perfectly revealing. Even state-linked giants began shifting ownership through proxies to protect themselves from surprise tax grabs. For everyone else, though, there was no such luck. Across Russia, daily life grew more expensive as the state increased taxes to pay for the war effort. Electricity bills rose by 12 to 15% in many regions, especially during the winter months. Gasoline prices also climbed, even as Russia sold oil abroad at discounted rates. The increases were driven by higher excise taxes, reduced subsidies, and logistical costs, not by global market trends. By early 2024, the fallout was undeniable. Russia's small business index had fallen to a 2-year low, with nearly half of all companies reporting revenue losses. Retail sales plunged by 8%, wiping billions from the economy. Business closures reached a 5-year high, and banks rejected 4 out of 5 loan applications. The so-called temporary war surcharges quietly became permanent. Even taxi drivers, the heartbeat of every Russian city, were feeling the squeeze, caught between rising fuel costs and new licensing fees. The war wasn't just draining money, it was rewiring the entire economy. Speaking of rewiring, that brings us to another one of Putin's not-so-clever tricks: the so-called war dividend. The word dividend makes it sound like people are getting rewarded for their sacrifices, right? Well, in reality, it's just another way to take money from people who never signed up for this fight. Here's how it works. The government leans on state banks and pension funds to buy its war bonds. These aren't normal investments. They're low return, high risk, and tied directly to the cost of war. On paper, it looks like the country is standing together. In practice, it's just the Kremlin quietly siphoning cash from every corner of the system. And the worst part? People don't get to choose. Their savings are redirected automatically, not because they believe in the war, but because the system gives them no way out. It's dressed up as patriotism, but underneath, it's just pressure. The state gets the money it needs, and regular Russians are left holding the bill. There's no dividend coming their way, only more strain, less security, and a future tied to a war that keeps demanding more and more. But that's only the visible part of the squeeze. The invisible one is even riskier, because it hides inside the country's own banks. Russia's financial system has quietly become the government's life support. State banks like Sberbank and VTB have turned into piggy banks for the Kremlin's deficit. They're buying up massive amounts of government bonds, known as OFZs, because no one else will. These bonds used to be safe investments, but now they're a lifeline for a government that's running out of cash. The more the state borrows, the more it pushes out the private sector. Small businesses that need loans to grow or simply stay afloat are finding that the cupboards are empty because every spare ruble is being funneled into the war effort. The setup still works, for now, but it's creating a dangerous cycle. If inflation surges again or the ruble loses more value, those bonds will sink fast. That would hit Russia's biggest banks hard, and with them, the savings of millions of citizens. In effect, the Kremlin has moved its budget crisis straight into the banking system. It's no longer just taxing citizens, it's gambling with their deposits. Still, Moscow keeps selling the fantasy of a prosperous nation. Turn on state TV and you'll see the same glossy ads showing new factories in occupied territories, shiny machinery, and smiling workers, all promising jobs, contracts, and a future where wealth trickles back home. The message is simple: sacrifice today, prosper tomorrow. It sounds good, almost inspiring, meant to make people accept the taxes, the dividends, the stolen money in the name of patriotism. But when you really dig into the numbers, that hope starts to look like a lie. Of the 1.2 trillion rubles earmarked for rebuilding Donbass in 2024, barely a fraction reached an actual construction site. The rest disappeared into Kremlin-linked logistics firms, inflated invoices for gravel that never left the rail yard, and salaries for foremen who don't exist. One leaked tender from Metropol listed a single kilometer of road at 42 million rubles, triple what it would cost to build the same thing in Crimea before the war. Every ruble poured into these phantom projects is one taken from the real needs back home. From a maternity ward falling apart in Ryazan to dialysis machines running on borrowed time in Perm, ordinary Russians are footing the bill. The new taxes, the endless fees, the rising utility costs, none of it is building a better future. It's all feeding a mirage, keeping people trapped in the hope of a payoff that's never gonna come. And that's the real danger. Hope can be powerful, but in Russia right now, it's being weaponized. It keeps people patient, waiting for a return that doesn't exist, while the government keeps draining their pockets. Every night, TV screens flash with images of progress. But behind that screen, you'll find empty classrooms, closed hospital wards, and rusting steel beams that tell the real story. The truth is simple. The war is feeding on the Russian people, not for their benefit, but for the state's survival. That dividend everyone was promised isn't a reward. It's a tax on hope. And Russians are paying it with interest. Adding to the strain, public services have begun to crack. Healthcare costs are climbing fast. Private clinics keep raising their prices, while hospitals report shortages of even the most basic supplies like bandages and antibiotics. Pensioners are splitting pills to make prescriptions last longer. And even the soldiers, firing the missiles, are starting to feel the squeeze in ways the Kremlin never anticipated. Even the elite are feeling the squeeze. Combat bonuses and airborne divisions have been quietly reduced, while officers face growing pressure to voluntarily contribute a slice of their pay to war-related expenses. Everyone knows it isn't really optional. If you refuse, promotions suddenly stop coming. In the Navy, submariners returning from patrols have seen their shore leave stipends slashed in half, with some posting photos of meager meals that say more than any complaint ever could. These frustrations aren't coming from pacifists or protesters. They're coming from the very people the Kremlin depends on to keep the war grinding forward. And that's what makes it dangerous. The defense budget may be rising, but most of that money is going into shells and hardware, not the welfare of the people using them. Even worse, the money that does go into the defense industry often fuels the very inflation it's supposed to fight. You see, when contracts are handed out without oversight, prices explode. Factories that once built civilian machinery now produce military equipment at triple the old cost, billing the state for every screw and circuit. Inflation doesn't just come from scarcity, it's baked into the system. The government pays inflated prices to contractors, then raises taxes to cover the extra spending, which drives up the costs again. It's a closed loop of waste that feeds itself endlessly. In theory, this spending keeps the economy quote-unquote active. In practice, it's like running an engine that burns its own oil. The military-industrial complex becomes a parasite, feeding on public funds and spitting out higher prices for everyone else. It's one reason inflation in Russia refuses to stay down, no matter what the central bank does. The economy keeps printing money to chase its own tail. Then we have another major problem that comes as a consequence of the deteriorating life in Russia: the brain drain. More than 100,000 young professionals, including engineers, doctors, and programmers, have packed up and left, searching for a future somewhere else. At the same time, hundreds of thousands of working-age men have either been drafted or fled to avoid it. The result is that factories are short on welders, farms can't find laborers, and trucking companies are desperate for drivers. As productivity falls, prices rise, and the cycle of hardship continues. This labor shortage has only made the inflation Moscow claims to be fighting even worse. And that shortage isn't just economic, it's reshaping the country's social fabric. With hundreds of thousands of working-age men gone, women have stepped into the roles that once kept the economy steady. They run farms, repair shops, and even transport fleets once staffed entirely by men. It's a quiet revolution born out of necessity, but it comes at a price. The burden of work, childcare, and household management has fallen harder than ever before on women, especially in smaller towns where support systems are thin. This demographic strain is already visible. Birth rates are dropping, healthcare costs are rising, and entire regions are aging faster than before. Fewer young people means fewer taxpayers, which means the state's future tax base is shrinking just as it needs to explode. The war might be fought abroad, but its demographic damage is unfolding at home. For those who stay, life keeps getting harder, as Putin keeps squeezing every penny he can get from them. Small business owners are carrying the heaviest load, weighed down by new taxes, endless local fees, and mandatory contributions. Running a business in Russia now feels like trying to sprint uphill with a backpack full of rocks. When people have less to spend, the entire system begins to suffocate. Every new tax or fee pulls a little more oxygen out of the economy. Consumers tighten their belts, shops sell less, factories slow production, and layoffs follow. Smaller paychecks mean lower tax revenue, which, crazy enough, forces the government to squeeze even harder. Economists at Reuters put it simply: Russia has fallen into a tax trap. Falling oil income pushes the state to raise civilian levies, but that cuts spending, shrinks revenue, and creates a vicious spiral that drags GDP down fast. Now, in the fourth year of this war, ordinary Russians are fighting on the front lines. The 2026 budget abandoned any promises of stability, relying instead on fresh levies and deep cuts to everything except weapons. It's a slow-motion cycle of self-destruction. The more Moscow takes, the less there is left to take next time. That's why frustration is quietly spilling into something else: the gray economy. Millions of Russians now work off the books, as tutors, handymen, or small-time online sellers. Some have even created entire ghost companies to avoid taxes altogether. The state knows it's happening, but they look the other way. Cracking down would just drive what's left of the economy further underground. As a result, an estimated 15 to 20% of Russian GDP now moves through unofficial channels. But the real crisis isn't just economic, it's psychological. People have stopped believing the system will ever play fair. They've watched every temporary tax become permanent, every patriotic duty turn into another bill. They know the war won't end anytime soon, which means the taxes won't either. And when trust in the state collapses, people simply start building lives outside of it. That's the real danger for the Kremlin. Not angry crowds in the streets, but quiet withdrawal. Millions of Russians are learning to live without their government, one side hustle or workaround at a time. And once that happens, no amount of new taxes can ever fill the hole left behind. And that hollowing out isn't just economic, it's cultural. People are slipping back into an old rhythm, one that feels eerily familiar to anyone who remembers the late Soviet years. Outwardly, everyone plays along. They pay what they must, repeat the right slogans, and pretend the system still works. In private, they laugh at it, they cheat it, or they ignore it entirely. The quiet cynicism spreads faster than any protest. When no one believes the rules mean anything, corruption becomes a coping mechanism, not a crime. This mindset kills initiative. Why start a business when it'll be taxed to the ground or seized by someone better connected? Why invent or innovate when success just paints a target on your back? The economy can survive sanctions, inflation, and even a war for a while, but it can't survive a population that stops believing effort matters. That is the silent collapse the numbers never show. With options dwindling and even the tax revenue falling short of targets, the Kremlin is running out of moves, and fast. The Sovereign Wealth Fund has been draining at an alarming rate. Nearly $30 billion was spent in 2024 alone, patching oil shortfalls and covering military costs. Printing more rubles has bought some time, but it has come at a cost. Prices have risen, savings have evaporated, and trust in the currency has begun to crumble. Another thing that has crumbled is Russia's future. The Kremlin's desperation has forced it to gamble with assets it once swore it would never touch. Beneath the Arctic ice lies Russia's last untapped oil frontier, a vast reserve of billions of barrels already mapped along the continental shelf. For years, Moscow boasted it would develop these fields with homegrown icebreakers and rigs, a show of defiance against sanctions and proof of Russian ingenuity. But by 2024, the reality caught up. The only company capable of drilling in 40 below temperatures, a joint venture with a sanctioned Norwegian firm, ground to a halt over missing spare parts. The rigs froze in place, leaving Moscow staring at a costly delay it could not ignore. To solve the problem quickly, the Kremlin made an unprecedented move. Exploration licenses were auctioned off to Chinese state giants in exchange for immediate cash. The price of that fast money was steep. Beijing now owns a sizable share of every future barrel and holds veto power over export routes. Russian firms kept the drilling contracts, but the profit split tilted heavily east. What was meant to be the crown jewel of energy sovereignty became the Kremlin's fastest ATM. Every barrel sold today is a barrel Russia will never tax tomorrow. Short-term cash came at the cost of long-term control. Selling the future to pay for the present is just another tax, one paid by generations who have not even been born yet. Still, all these moves have been unable to plug the hole burning in Russia's pocket. So with the Arctic cash burning fast, Moscow has turned to old allies for more. In recent years, the BRICS group has stepped in with loans and swaps that looked like salvation, but only tightened the noose. Shanghai's New Development Bank wired $1.2 billion for infrastructure, but the money flowed straight into rail lines feeding the front and supply chains for shells. It arrived in yuan and rupees, trapped behind controls that make spending outside the bloc nearly impossible. Once again, what that means is that Russia is getting the short end of the stick. And as if that's not enough, Russia handed over veto rights on pipeline routes, stating that if oil prices dropped below $70 a barrel, China would have the controlling interest and direction. And you already know what happens when you make such dumb assurances. Global demand wobbles. India, too, deepened its economic ties with Russia, continuing to buy discounted Urals crude as part of a broader push to reduce reliance on the US dollar. In March, the Reserve Bank of India approved a $400 million swap line to support ruble trade settlements, allowing Indian banks to streamline payments and open special rupee accounts. This move helped bypass Western financial systems and gave both countries more flexibility in bilateral trade. India also increased its investment in Russian fertilizer ventures, with funding estimated in the hundreds of millions. These deals were framed as agricultural cooperation, and while they supported Russia's export earnings, there's no confirmed link to military spending or ammunition subsidies. Despite the financial boost, these arrangements come with limits. The rupees Russia earns from trade are largely trapped within the Indian banking system, usable only for purchases from Indian suppliers. That constraint gives Delhi indirect influence over how and where Russia spends its earnings, but not formal veto power. The swap lines and trade deals offer short-term liquidity, and they also tether Moscow to terms set abroad, trading flexibility for financial survival. And still, at the end of the day, these BRICS deals buy weeks, not years. Each loan siphoned rubles from homes to battlefields. For what Russia is giving up, they are essentially getting nothing at all. Moscow has been gaining short-term liquidity, but losing long-term freedom, burdened by foreign accounts that demand more than rubles could deliver. One look into the past, and history clearly shows us what comes next. When economic pressure builds, it always turns political. People who are paying for a war they never chose to begin with can start to lose patience. The illusion of stability fades quietly, one act of defiance at a time. That's the real catastrophe. An economy that looks alive only because it's feeding on itself. And that pattern is what we're seeing on the ground. Russia has drained its citizens to keep a war running, a war that is costing more than it earns. That strain is being transferred to the masses, as taxes climb, hidden fees appear, and utility bills rise. No matter how much the government takes, it's never enough. And so, sooner rather than later, people will start to give up. Taxes will go unpaid, bills will pile up, and small businesses will shut their doors. At some point, the government may take extreme measures. Bank accounts could be frozen, assets seized, and withdrawal limits imposed. Citizens might even be forced to buy government bonds. These steps might bring in cash for a short while, but they'll make the long-term crisis worse. Every attempt to stabilize the budget risks destabilizing the people. And the Kremlin's sharpest new weapon isn't a tax, it's a currency. That method is the digital ruble, Russia's state-backed electronic currency. Officially, it's being sold as innovation, a modern way to make payments faster and safer. In reality, it's something much simpler: control. Every transaction can be tracked, traced, and taxed automatically. Once the digital ruble rolls out fully, the state won't need to ask for money. It can just take it right out of your account. This new system also gives officials the power to freeze funds, restrict spending, or even limit what certain groups can buy. The idea is to make the economy efficient, but efficiency in this context means obedience. It's a dream tool for a government short on cash and patience. Once the digital ruble is everywhere, skipping a new tax or a new fee will be almost impossible. The line between patriotism and punishment will vanish completely. Soon the state won't send a tax bill. It'll just help itself from your phone while you sleep. Funny enough, some of these moves are already happening. State banks and pension funds are being pushed to buy government bonds, lending money that the state may never repay. It's sold as an investment, but it's really a quiet form of confiscation, locking citizen savings into a war they never agreed to fund. But the shockwaves won't stop at Russia's borders. The world is already feeling the tremors. Cheap Russian oil flooding the Asian markets keeps global prices deceptively low, masking instability that could erupt once Moscow can't afford to keep discounting. A sudden Russian pullback would tighten supply and spike costs everywhere, from Mumbai to Berlin. China, meanwhile, has become so tied to Russian exports that its own energy security is now tangled with Moscow's desperation. For Europe, the danger runs in the opposite direction. If Russia's finances collapse too quickly, its energy output could fall off a cliff, shaking global markets all over again. That's the paradox. The slower Russia sinks, the longer the world enjoys cheap energy, but the deeper the eventual crash. The Kremlin's tax crisis is not just a Russian story. It's a fuse running through the global economy. Russia's tax crisis is more than numbers on paper. It's about survival. Every tax increase and hidden fee drains the country's strength. The government may pretend stability exists, but it's built on the backs of citizens running out of money and patience. The real battlefield is no longer in Ukraine. It's in the kitchens, the wallets, and the bank accounts across Russia. The war economy still runs, but every day pushes the country closer to a breaking point. Financially, socially, and politically. The truth is that Russia will not collapse overnight, but the warning signs are impossible to ignore. Inflation, capital flight, and brain drain are accelerating. The harder the government squeezes, the weaker society becomes. The war keeps burning through billions, and the people keep paying for it. Sooner or later, the gap between propaganda and reality will become too wide to close. If you're tired of getting your news from media outlets owned by billionaires, lobbyists, and government mouthpieces, then you're gonna love Global Recaps. It's our free newsletter where we break down what's really happening in the world, from the Russia-Ukraine war to China's global moves, without sponsors, ads, or censorship. No corporate filters, no both sides spin, just straight, unfiltered geopolitics. The kind of analysis most mainstream outlets are a little too afraid to touch. We write it ourselves, independently, and we answer to you, not some boardroom in New York or Beijing. If you want a place where the truth still matters, where headlines aren't for sale, and where global stories are told as they are, then join Global Recaps right now. Just click the link in the description or go to globalrecaps.com and sign up. It's free, it takes 10 seconds, and it's the one email you'll actually want to open every week.